I thought of silver as second class for a long time. In fact, when I was a money manager and speaking at a conference, the silver bugs would ask me, "So you love gold? What about silver?" I'd answer, "Well, silver's like kissing your sister," which made them very angry. But thank goodness, when it dropped below 30 for a short time early last year, one of the smartest people I know taught me a lot. It also showed me how the silver market has changed and how it is used in more places. And the spread was getting so big, it was getting close to 100 to 1, that you had to buy it, which is what I did. So I told them that gold could lead for the rest of the year after what it had done. And it did. Still, it's not even close to the same amount of money. It's not going to be ever. We aren't seeing those same shell banks buy a lot of silver, not yet anyway. We're not sure if they are. But even though prices have been going down for years and above ground supplies are running out, there are now new investors interested in the market. These are two very big differences. Let's look at the main one. There have been big changes in the real market. In 2011, that rise in the gold market was more due to paper. A lot of power used to be held in the real market between London and the US. Now, it's almost too big for them to handle. It moved quickly to Asia at a time when people there are using metal for the reasons you might want. Not these groups that use to trick people, sell things ahead of time, and do many other bad things. Some people believe that there are derivatives on these things that have been sold 3, 4, or 5 times. The change in the body and the pressure on the body. As we just talked about, that physical demand was caused by people in that part of the world wanting to break away from the US and trade with other countries instead of relying on the US. They were going to use gold as one of their trading tools. This unit was first shown to us a few weeks ago. Not in the test phase yet, but it's clear that this is moving forward. They are going to use gold as part of the way they pay each other. That was really a very important factor. What other really bullish thing have people not seen is that we're now seeing the people who, for 40 of my 42 years on Wall Street, treated gold like poison. They didn't talk about it. They never brought it up. Changes in geopolitics are driving this physical demand. There are more and more countries that are actively moving their trade and savings away from the US dollar. New processing systems and trade units were just put in place that make it clear that gold can be used for cross-border payments. This isn't a game, it works properly. Gold is quietly making a comeback in the financial world, but not as a nostalgic item. Instead, it is being brought up as a neutral security between countries whose currencies are no longer trusted by each other. That alone changes gold's long-term role and sets the current market apart from others seen in the past. I used to manage money, but it's clear that the last 25 years with a planning group were the most recent. I would sit down with people and tell them, "Listen, I want you to buy gold and hope it doesn't go up." Almost everyone did what I said. They looked like that dog that couldn't understand what you said. "Mr. Granwich, I don't understand why you would want me to invest in something that you think isn't going to go up," they would say. "Well, based on the fact that you have all these financial assets, if it does go up a lot, chances are what you own a lot is going to go down." On Wall Street, no one would even consider it for a portfolio. There are now 3 big US banks that have talked about adding it to the 60-40 portfolio, which is made up of 60% stocks, 20% bonds, and 20% gold. Gold is finally being looked at by the so-called mainstream, which has been going on for a long time. It hasn't reached the point where everyone is lining up to get it yet, but it's no longer being snubbed, thrown around, and treated like trash. Check out what this Bitcoin group or this leader sailor has done in the last 3 or 4 years. Not only was telling people to sell all of their assets, like stocks, bonds, real estate, and other things like that, and borrow money to buy one thing, which is something no one should ever do, even just for gold, was his whole point. But keep in mind that gold was his main goal. It's old stuff. It doesn't help. You need to get out of there. What did it do since then? Since he said that, it's gone up 150%. His goods are bought and sold in this way, between 2 floors and all that. In other words, it has a very different tone all around. Mainstream finance thought gold wasn't important and might even be dangerous for decades. Portfolio managers avoided it, advisors didn't believe in it, and institutions wouldn't admit that it was a hedge. That way of thinking is finally changing. A number of big U.S. companies now talk publicly about their portfolios that have gold as a main asset. Instead of 60-40 stocks and bonds, there is now 60-20 with gold as a base. It's not quite happiness yet, but it's getting there. Gold isn't made fun of or forgotten anymore. It's being reclassified as insurance because the banking system is becoming less stable. At a time when, for most of the other metals and base metals, not a lot of money was being spent on finding new sources. You said that the business has been in survival mode since then. From 2012 to maybe 2023, they were mostly just trying to stay alive, especially from 12 to 18 or 19 years old, until gold started getting close to 2,000 for the first time. Now, this is the only place in the world where you can't just go look. 25 to 30 years ago, we could spin the world and say, we can go there. For big mining companies, half of the world is no longer a good place to do business because of the risks, politics, society, and economy. On top of that, mainstream Wall Street analysts are finally, and I mean finally, ready to look at gold and uranium producers instead of the little juniors that are way down on this level and start to realize, hey, you know what? With $4,500 gold and $6 copper, remember that their cash flow isn't like that of other industries, like gold producers or whatever important metal you want to talk about. They had two main big costs. Energy costs to get their ore out and pay for workers have both gone down for them. And there's nothing coming up that will make that go up a lot. The cost of what they want keeps going up, though. It looks like they'll keep making the same amount of money, which is how the market is making money right now. Main Street and Wall Street will be even more interested in the metals and mining business here in 2026. From my point of view, as demand grows, supply becomes more limited. For more than a decade, the mining industry just barely made it by, cutting back on research and delaying new projects. Today, there are fewer places where large-scale mining is politically or socially acceptable. But at the same time, experts are looking at producers again because margins are growing. Energy and labor costs versus metal prices. That's all there is to mining. While prices have gone up, costs have stayed the same. That means that money is coming in faster. Even though the stock market as a whole is seeing profits slow down, this imbalance is making big investors pay attention to miners again for the first time in years. I thought of silver as second class for a long time. In fact, when I was a money manager and speaking at a conference, the silver bugs would ask me, "So you love gold. What about silver?" I'd answer, "Well, silver's like kissing your sister," which made them very angry. But early last year, when it quickly fell below 30, I learned a lot from one of the smartest people I know. That experience helped me understand how the silver market has changed and how it is used in industry more. And the spread was getting so big, it was getting close to 100 to 1, that you had to buy it, which is what I did. Then I told them that it could lead gold for the rest of the year because of what it had done, and it did. Still, it's not even close to the same amount of money. It's not going to be ever. We're not seeing those same shell banks buy a lot of silver. We don't think they are, at least. But what we're seeing here is the result of years of decline and the use up of all the above-ground supply. There is now a new interest in it as an investment, separate from its commercial use. On top of that, some people played the real short side and hid it. I used to be abused. There was a group there. People can see that the gold and silver markets have been severely slowed down, and I think what you're seeing is the unwinding of that. As much as people say, "Oh, we had a quick washout down," I don't think they'll get back to where they were. When they lost the real market, I think they no longer feel in charge. And that's what comes back to bite them. That's why I would say they're not trying to get the same gains as last year. That's what I want to say. I don't think there's a triple-digit return there again. Oh, I see. I thought it was a round number, $100 for silver and $5,000 for gold, from the time I got involved. I believe we're going there. I think we might even get there faster than I thought. But I believe that once we reach that point, we should think about what could make it double from there. This is all I can think of right now, my friend. People used to think of silver as less important than gold, but that idea is starting to fall apart. Demand in industries like electronics, solar, and electricity has gone through the roof, while supplies above ground have slowly been used up. When the ratio of gold to silver got close to all-time highs, the market knew something was wrong. At the same time, prices were kept low for years by active short selling. That control is now being lifted. Silver isn't taking the place of gold as a stable asset for money, but it is becoming more of a mixed asset that can do better in the later stages of a metals bull market. It is part industrial metal and part monetary hedge. A lot worse problems than the ones we're having now. Then I asked myself, will it be worth it? Is it worth it that my silver doubled again, but now my life is so hard that the gains aren't worth it? That is something I don't know yet. We're still not there. But I do believe that shares are where the power is in this market right now. Yes, gold and silver prices may still double from here. If they do go up that level, though, the mining shares will earn 5 to 10 times as much as a double. Just think about how huge it is and how it all works out in the end. The junior resource market is still interesting, even though it's not on fire just yet. However, it is still competitive because people who used to flood into it have gone to other places, especially crypto. If crypto hadn't been around for the past few years, I'm sure some of the money that's been in it would have gone into the junior resource market. It hasn't changed. We don't want the stock market or crypto to crash because then people won't have time to switch. But now we're beginning to see people. I knew it because of the crypto cult. I call them crypto nuts because they're a cult. They're not taking an unbiased look at it. Now they're saying, oh, silver's overpriced and this will make Bitcoin. That's just a dream. That is true, and there is no proof of that since the opposite has been happening for them. So I think silver, gold, and copper will all do well. Even nickel, which has been very severely depressed, is starting to rise again, which could mean we are in the last stage of this middle move in metals. While it has come a long way since its low point, the factors still don't point to a big rise in the price. In the end, both silver and gold go up, but I think you focus more on the share level than the actual metal. In terms of fundamentals, copper may be the best metal after gold and silver. Or, grades are going down, mines are getting old, and for new projects to make sense, prices need to stay well above historical averages for a long time. As electrification, AI infrastructure, and grid growth speed up, the supply of copper seems to be getting tighter. Still, even though prices are going up, metals aren't really cheap anymore. This is why funding is important. The next step might reward both positioning and patience. While physical metals can help protect you, the best way to make money is to invest in quality mining stocks, especially in copper and gold projects where cash flow can grow quickly in the years to come. Copper is my favorite metal, and if you can find them both together, my biggest investment is in a company that is working on a copper-gold project. Big gold companies that used to only work with gold are now looking at copper projects as well, and ideally a copper and gold project would be even better. This shows that copper is currently a lot more interesting. This other company is getting a lot of attention because there aren't many of them. But I will tell you that this copper is pretty cool. I've said this since the beginning. It will take less than 4. The price needs to be much higher than 6 and stay above that. So it might be around 7 or 8 before big companies spend billions of dollars. When it comes to pure copper projects, copper is very pricey compared to other types. So they will want to be sure of it. There are 2 more things going on right now that are also improving the price of copper. We can see that the average grade in the mines that are still open has dropped by half. To get the same amount, they need to move that much farther. A lot of them are having trouble because they're getting older and finding it harder to keep their mines active. I think the copper case is the best of the 3 right now based on pure fundamentals. That's why I think we're seeing it in this, break to $6 above right now. I believe that is taking place? That means you're right. I'll answer your question in more detail. Now, you ask me, is there any area that you think is cheap? Not at all. That is the problem with the metals. There is no noise. But what about oil? They ask. If it was 120, I bet my clients it would be 50 before it reached 150. It only took a $30 win for them. I had to lose $70. What's wrong is that the shares are still moving as if oil were 80 or 90, even though we're getting closer to 50. That being said, I can't think of anything cheap that they offer as a group. This is one reason why cash and liquidity are big parts of my investment plan for this year. I don't feel like any area is really undervalued anymore, so I feel safe going into it.